Hello, today I'm going to present my Birken Road team's research on SEACOR Holdings. First, I'm going to describe the company, then I'm going to talk about the current market situation, and I'm going to conclude with a valuation and market recommendation. SEACOR Holdings is a provider of marine transportation services for energy and agricultural markets domestically and internationally. Founded in 1989, SEACOR has been publicly traded since 1992. The company is headquartered in Fort Lauderdale, Florida, with operations around the globe. SEACOR has a market capitalization of $1.33 billion as of April 12, 2015, with revenues of $1.32 billion in 2014. The company currently operates in 5 market segments: offshore marine, inland river, shipping, alcohol manufacturing, and other. SEACOR's offshore marine services offered a worldwide fleet of efficient vessels to the offshore oil and gas exploration and production industry. SEACOR's fleet consists of anchor handling towing supply vessels, crew boats, fast support vessels, platform supply vessels, standby safety vessels, specialty vessels, and lift boats. Offshore marine provided $529.9 million in revenue in 2014, making it the company's largest business segment. Inland River Services is responsible for providing customers with river transportation equipment and services. The fleet consists of both barges and towboats. These vessels are capable of transporting agricultural, industrial, and chemical cargo, as well as storing ethanol and petroleum. In 2014, Inland River Services was responsible for $233.8 million in revenue. SEACOR's shipping services offers transportation services, bunkering, harbor towing, liquefied natural gas terminal support, logistics, and third-party ship management services. The segment accounted for $209.3 million in revenue in 2014. The Illinois corn processing segment is responsible for alcohol manufacturing, storage, and distribution. The alcohol is used in food, industrials, petrochemicals, and ethanol production. The segment accounted for $221.6 million in revenue in 2014. SEACOR's other services include emergency preparedness and crisis response, agricultural trading and logistics, and clean energy. SEACOR netted $81.4 million in revenue from its other services. SEACOR's highly diversified operations place the company within a unique industry segment, yet we established 4 peers with similar size, valuation, and growth profiles. The peers include Tidewater Inc., Hornbeck Offshore Inc., Gulfmark Offshore Inc., and Kirby Corporation. Tidewater, Hornbeck, and Gulfmark rival SEACOR's offshore marine services, while Kirby rivals SEACOR's inland river services and offshore marine services. SEACOR's earnings per share stand out amongst its competitors. We believe SEACOR delivered a strong earnings per share compared to its competitors because SEACOR is diversified in different business segments. When determining a value for SEACOR, we use 2 different methods: price to earnings multiple method and price to book value method. The valuation for the price to earnings multiple method was calculated by taking SEACOR's historical price to earnings multiple and multiplying that number by its 2015 projected diluted earnings per share. This gave us a projected valuation of $67.83 a share. The valuation for the price to book value method was calculated by simply dividing SEACOR's projected 2015 stockholders' equity by its projected 2015 end basic shares outstanding. This method calculated out gave us a price of $82.56 a share. We used an equally weighted combination of price to earnings multiple method and price to book value method to establish our 12-month target price of $75. We also experimented with using a discounted cash flow method to come up with a valuation, but it resulted in a negative short-term cash flows for the company, and we ultimately felt that the DCF method did not capture SEACOR's true value. After doing our valuation for SEACOR, we can now evaluate different aspects of SEACOR in order to make an investment decision. First, SEACOR's diversification has been critical with the unfavorable market conditions in the oil and gas industry. Due to SEACOR's diversification, they were able to create a natural hedge against the exposure to commodity price fluctuation. Also, with recent U.S. production increases, there will be a greater demand for SEACOR's services in the coming future. Another key point to look at is SEACOR's strong balance sheet, which will provide a steady year for SEACOR. SEACOR has the opportunity to purchase assets for a depreciated price due to the current downturn in commodity prices. Finally, however, with the oil price decline, SEACOR's margins will get squeezed, which gives SEACOR less price power for its services, which will ultimately decline its profit margins. SEACOR's current market price is $68.10 a share. SEACOR's market price reached a peak of $98 on October 29, 2013, with a downward trend since then. Our 12-month target price prediction is $75, slightly above its current position. After assessing all this information, we believe SEACOR will perform consistent compared to the rest of the market, thus yielding a grade of market perform. Thank you very much for listening to this presentation. You can access the full report at www.birkenroad.org.